Hi folks, welcome back to the channel. It's time for the monthly market update. This has been a weird year. After the last almost 3 years of slow movement in the marketplace, we've actually seen an uptick of home buying in October, which you don't really expect. You expect it in the spring. But there are things changing in the marketplace that are helping people get into home buying right now. And we'll talk about that just a little bit. And in real estate news, we see that more home buyers went under contract in October. So as we scroll through, we see the pending home sales were up 1.9% last month after upward revision in September of 0.1%. Not a big gain at all. That's odd because normally September, October are the slowest times, and because people don't want to be showing their homes during Thanksgiving and Christmas. So we'll often find that sellers will pull their listings off of the market. We'll have fewer homes on market, but also we have fewer buyers in the market at the same time. Again, odd. This is an odd year. And we'll see that the Midwest had the biggest jump of 5.3%, but nationally we went up 2%. Pending sales remained below levels from a year ago, but we still see price increases. And we see, because of interest rates falling, we do see more mortgage activity, although we're down from the start of the year. And mortgage applications have surged, rising 26% annually. Another factor has been that wage growth has outstripped inflation. So here's a chart provided by Dr. Lawrence Yun, who is the chief economist for the National Association of Realtors, where you can see, even though we do have inflation, it's come down quite a bit since 2022, but we still have price increases every month of about 3%, while wage growth has gone up 3.8%. So given these two factors, where mortgage rates are trading within a range, and wages are starting to outpace inflation, we see in 2026 that NAR, the National Association of Realtors, are predicting a 14% jump in sales in 2026, particularly if we stay at around the 6% mortgage rate and wages continue to rise. And even though I usually start the monthly market update with mortgage rates, I wanted to give you that bit of information first. Let's take a look at the 30-year fixed mortgage rates and where they're at today. From January, we see a continual downward trend on mortgage rates, and we're sort of plateauing right now, where things have dropped, and now we're sort of in a flat period. If we go back to September, we see that we're trading within a range, basically between 6.1 and 6.4%. We haven't seen a lot of movement above or below that over these past few months. So people might be getting used to this as the new normal. Well, if we look at FHA, well, FHA is always a little bit lower. We can see that FHA rates have continued to drop as well, all the way down to 5.82% recently, though it's gone up a little bit in the last day or two. Now, if you're into a 15-year instead of a 30-year, if you can finance at a little higher monthly payment, you can also get a lower rate. So let's take a look. From January 2025, we see again the continual downward trend, and now we're at 5.79 for a 15-year fixed. So if you can afford it, that's where you're going to get the best rate. So we covered the national market. Time to take a look at Phoenix, Arizona, and the 27 cities surrounding Phoenix. In Maricopa County, we have 13,339 active listings in October. Under contract, we had about 4,263. New listings coming on were 5,988. So that was up. You can see the indicators showing that they're up. Sold listings were down month over month, but they were way up over the 12-month period. A year ago, this same month, the sales were actually up. Average days on market, slightly down from last month, but still up. And our sales transaction type, mostly normal sales. The new home builders still have about 13% of the market there. And then we have some flips and some other ones. When we look at new listing price per square foot at about $280, just below $280. Those are ones that just came on the market, so they might be priced a little high. We always look at the medians. Under contract, you can see it drops down below $270. Look at sold listings and price per square foot. When it finally sells, you can see it's way down, almost at $260 a square foot. And we can look month over month, year over year. You see from current year to last year, we're down about 1.21% on the average. We're down 2.45% on the median price per square foot. And sold volume is up. You'll see that we're up about 2.88% on the number of units sold during this period. So now we're going to take a look at cumulative days on market. We have average and median here. Median, you can see, has dropped down pretty significantly. Average has stayed pretty flat. And this just shows us how long it takes. This is for the last 24 months, this chart covers. And we can see that drop. Now, when we look at the average cumulative days on market, last year at the time it was 69, now it's up to 83. The median was 50 and it's up to 57. So still a little bit slower than it was last year, but it's dropped in the last few months, which is important. It shows that there's some acceleration in the marketplace. Next thing we want to look at is the average sold to list price and the original price. So the list price is in the black and the original price is in red. The list price is the last price listed in the MLS, and the red is what they put it in originally. So if there were some price drops, we'll see that list price reflects that they're getting about, on the median, about 97.75% from that final price. From the original price, you're only getting about 94.75%. So this is a pricing issue. If you price it right, then you're going to get movement in the marketplace and sell the house a little bit quicker. But it's not going to be that price you wanted originally. It's not 2021 or 2022 anymore. So you have to be realistic. In this marketplace, particularly this time of the year, is kind of slow. Another consideration regarding what the market is doing is supply and demand summary. And you can see here, for the last 3 years, from 2023, 2024, 2025, seasonal active listings have been going up. They've been accelerating, and that gives us high inventory, of course. And they're not selling very fast. This is the demand. Demand is about 20%, you can see there. Another key barometer is month of supply and absorption rate. You see we have 4.23 months of supply, which is quite a bit. Absorption rate is low. Next, we want to look at what the average price is and the median price. Median is more important to us. We see for October, the median price was $475,000, which is flat from a month ago and pretty flat from 12 months ago. So you're getting the same price for a house right now as you did 1 year ago. One of the last charts we'll look at is basically what's sold over the last year. And the blue-green bar are the number of sales. The red line is the median price per square foot. Year over year, we can see that we were actually up 6.2% on the number of homes sold, though the price per square foot median is down about 1.4%. Folks, I hope this information was helpful for you. We showed what's going on nationally. We also looked at mortgage interest rates, which is the linchpin on uncorking this housing market. And we focused on Phoenix a little bit to see what's happening in this city. If you have any questions about some of the 27 cities that surround Phoenix itself, place to live like Goodyear, Buckeye, Peoria, Glendale, Sun City, if you're looking to retire, give me a call. My information's at the end of this video. And always like and subscribe. So I'll see you again here next month. Thanks for stopping by.